Did you know the core philosophy of technical analysis is rooted in a law of physics? It's true. The belief that a market trend in motion tends to stay in motion, unless acted upon by an external force, is essentially an adaptation of Sir Isaac Newton's first law of motion. This idea forms the basis of what we can call Newtonian market trends, the principle that prices trend directionally and will continue to do so until something dramatic changes the collective supply and demand. So, how do you use technical indicators to analyze these Newtonian trends and spot when that external force might be about to hit? It comes down to two things: measuring the trend's direction and measuring its momentum. First, for the direction, the best tool is the moving average, or MA. Think of the price action as a speeding car and the MA as its steady path. The most popular are the 50-day and 200-day simple or exponential moving averages. If the price is consistently trading above a long-term moving average, that's your uptrend in motion. A price crossing below that average? That's the external force acting on the object, signaling a potential trend reversal. Second, for momentum, the speed and conviction of the price movement, you need an oscillator, and the Relative Strength Index, or RSI, is your go-to. The RSI measures the magnitude of recent price changes to evaluate overbought or oversold conditions, ranging from 0 to 100. When a stock is trending up, a high RSI reading, typically over 70, suggests it's becoming overbought, like the force pushing the trend is starting to run out of steam. Conversely, in a downtrend, a reading below 30 signals oversold, suggesting the selling force might be exhausted. The key to a true Newtonian analysis is combining them. If you see an uptrend moving average still pointing up, but the RSI is flashing overbought, you can anticipate the trend is likely to continue, but a slowdown or friction might be imminent. However, if the price breaks below its moving average and the RSI is simultaneously diving deep, you have two indicators confirming that a significant external force, like a major news event or sentiment shift, has successfully reversed the previous trend. By viewing price action through the lens of physics, you stop guessing and start measuring the forces at play. Remember, identify the current trend path with your moving average, then use momentum indicators like the RSI to gauge the conviction and look for signs of that crucial external force. With that said, thanks for watching, and until next time.